they're building up against a backdrop as well of a situation where the forces that have driven globalization through the 1990s and into the earlier part of this decade are facing three sets of questions and three sets of challenges. The first challenge is the challenge that was posed through the 1990s, and it was the challenge about financial crises. And it was the argument that is globalization, is the inevitable price of globalization, particularly financial globalization, that we have periodic financial crises? And if so, is that a price worth paying, and can we mop up successfully after the crises so that growth continues afterwards? That challenge is seen to, it sort of peaks with the Asian financial crisis, the Russian debt default and LTCM. We get a sort of a brief return of that with the Argentine default in 2001, but then after that is a big worry for globalization. It actually seems to fade a little bit, and when we get another major hedge fund failure in 2006, Amaranth, which loses about $6 billion on US natural gas futures, virtually nobody even notices. So the financial crisis challenge to globalization is one that it's still there in the back of people's minds, and it's in the front of people's minds who worry about global imbalances, but a lot of policymakers are starting to move away from their central focus on it. The second big challenge to globalization that's emerging at this point is one that's come out of the success of globalization in Asia in particular, and the rise of the big trading powers like China. And there's a sort of a twofold challenge to this. One is the adjustment strains of injecting all these new workers into the world economy. And what that does, you have this major supply shock into the world economy, which people worry, and there's a big debate whether rightly or wrongly, but people worry is a contributory factor to inequality, and people worry, particularly in the developed world, means that they're, in some sort of relative sense, that they will be under more pressure, that their living standards will be under more pressure than they would be. Linked and related to, in parallel to this, there's a sort of a parallel challenge which we saw, for example, at the Battle of Seattle when the WTO fails to get going in '99, and in repeated injunctions since then about this sort of skepticism about globalization in terms of what it means for labor rights, what it means for fairness, if you like. There's this sort of sense about, is globalization fair or is it somehow exploitative? And so you have that challenge coming back from sort of a new kind of coalition, not the old left coalition, which would have looked back to central planning, but a new one that is sort of, it's not quite a formulated alternative position that's out there, but it's sort of, again, this kind of skepticism about what the system's bringing. And then the third challenge that the globalization is facing at this point is one that's generated about sustainability issues. And there are two big ones here. The most obvious and the most pressing one is the challenge that's raised by global warming or climate change. But there's also a secondary one which we see running very strongly in 2007, 2008, when we have a major commodity price boom on the scale of the kind of commodity price boom we had last seen back in the 1970s. And it's this idea about resource constraints or resource sustainability to growth. So we have a food crisis in 2007, 2008, where countries, in several cases, start to really worry about the ability to feed their populations. We have big oil price spikes where countries that are dependent on energy-intensive growth worry about sustained access to oil supplies. And we worry, and there's a concern here about not so much about whether food or oil will run out, but whether the market system can be relied upon to deliver them, or whether countries will in effect decide to defect and opt out of that system and find alternative measures. So, for example, at the height of the food crisis, several food exporters put on export bans. They, in effect, defect or opt out of the system. There's sort of a long-standing story on oil markets whereby national oil companies increasingly hold oil reserves, and whereby countries that don't have their own national oil companies look at things like equity oil as a way of at least paralleling or insuring against market failure. So you have these three big challenges running to globalization through the 90s, even as, against this backdrop of financial globalization, added risk in the financial sector, and global imbalances. And the thing that people like me were worrying about in sort of 2005, 2006, was that maybe it was the social challenges to globalization that might have been the big risk. And so you have people like, for example, Larry Summers, who's now a senior advisor to Obama, but writing in the Financial Times saying the big challenge facing globalization is that the global middle, isn't doing that well out of it. How do we get them re-engaged? How do we develop or sustain the political appetite to keep globalization going? Others argue that the big problem is going to be, particularly during the food crisis, the problem is this idea of resource constraints Others on the climate change front argue that the big problem or the big challenge is going to be the running into these binding, these sustainability issues. It turns out, of course, that the one that actually blows everything up is the first one, the one we had the warning signals through the 1990s, and that's the financial crisis. So we get the global financial crisis. It turns out that all of those market decisions, taking on the extra risk and taking on the extra leverage that we thought, were maybe working out okay, turn out to not be okay at all, and the system blows up as a result of those. So the big challenge, it turns out, comes from the first of the three rather than the other two. And then what's quite striking is that the same forces that helped drive and propagate globalization through the preceding period, so trade, internationalization of production, and global financial capitalism, now kick into reverse and propagate the financial crisis across the world economy. So it turns out that financial globalization means that it's not just segments of the US market where the US housing bubble has burst that suffer, but it's that every bank who's managed to get some of this toxic debt on their balance sheets is now in trouble. So it propagates across much of the developed world's financial system. As demand or demand expectations collapse in the developed world as a result of the financial crunch, then that shock is transmitted through the international trading system, through the trade supply links to the developing economies. So the decoupling story that people have been starting to tell suddenly gets a rude shock, as basically global trade in the final quarter of 2008 and the first quarter of 2009 falls off a cliff. In fact, you get, for that first 6-month period, falls in world trade that are bigger than the sort of falls in world trade that you saw in the 1930s Great Depression. So you have this network of globalization that you built up over the previous 2 decades turns into a transmissions mechanism for this nasty shock that runs through the world economy. And you have, I think, not hugely unrealistic discussion through particularly the height of the crisis about, well, is this it? Have we hit the high watermark? Is the whole system going to fall apart now? 2009 is the obituary for the first global economy, and it's all over. I mean, it turns out that that's not what we get. It turns out that, contrary to what pessimists out there used to thought, policymakers have learned from history. The world economy doesn't rerun the Great Depression of the 1930s. Monetary policy, fiscal policy are deployed pretty effectively, and the world economy stabilizes. There are all sorts of nasty consequences for the way that stabilization is done, and things that we don't quite know how we're going to work out. We don't know what the consequences of, for example, the big public bailouts will be on moral hazard. We don't know what the consequences of the sharp run-up in public debt is going to be. We know that countries have added, in some cases, public debt at the kind of rate that it normally takes a major war to generate, and they've done that in a very short period of time, but we don't know what the long-term consequences of that will be. But we know that at least we staved off, we didn't rerun the nightmare scenario that people had worried about. We saved, if you like, the system. So global capitalism didn't come to an end in 2009. It keeps going, it keeps running. But it's left with the same 3 challenges that had emerged through the 90s and through the 2000s, I think, are still there and still facing us. So we still have the challenge about periodic crises. Is it the fact that, an awful lot of people who would study capitalism at the time would argue that this system is just inherently crisis-prone and that you have to learn to live with it? Or can you mitigate the crises? Can you get policy right? Is the problem the reason that you have the crises is because of regulatory and policy failure in specific markets? And if you actually figure out your regulatory policy, you might get crises, but they won't be as big. Are there things that you can do to avoid them? The second challenge, I think, is still there too. How you manage a much bigger globalized economy, and one that includes an awful lot of very large emerging markets who have very low income per capita and which have very different structures in the past. And how do you manage a global economy when there are all sorts of issues that people have over things like food quality, over things like beliefs on child labor, beliefs on what's fair trade versus free trade, all these social challenges that were there during the 2000s and have been pretty much pushed to back of mind as a result of when you think the world economy is coming to an end, you tend not to worry about these kind of issues. As growth starts to ratchet up again, those things will come back. And again, as growth ratchets up again, and as we've already seen, in fact, if you look, we haven't seen the big collapse in commodity prices, or at least not as far as people might have expected. The same issues about sustainability, the same issues about climate change, about resource security are also going to come back. So the 3 big questions that were posed before the global financial crisis will still be being posed afterwards, and we're still going to struggle with how we find an answer to them. And the point I think that I'll finish on is that one argument that a lot of people would say is trying to figure out the answer to that question is about figuring out a fundamental challenge about a global economy. And that's if you have a global economy, but you have a whole lot of national regulatory and political systems, are the two compatible between them? Or do you need to come up with institutions that mediate between the various national political systems and the global or the international economy? We used to have those sort of those institutions in place through the old Bretton Woods systems. So the GATT, which became the WTO, the IMF, the World Bank. A lot of those have fallen into a degree of disrepair, but they're still there. And we've also, one product of the global financial crisis, which is quite new, is that we started for the first time since 1989 to develop a new international institution, which is the G20 Leaders Meeting. And in fact, we have this interesting situation now, which is where the global economy is being run by something old and something new. We have a revitalized IMF. The IMF is suddenly getting a lot more money and a lot more attention than it used to have. We have something new. We have a leaders meeting, which for the first time recognizes that the balance of power in the world economy has shifted, that you have a whole bunch of important new players led by China, but a whole bunch of other emerging markets, and a raft of second-tier players too that have an important contribution to make. So we've made, I think, a small step towards creating some institutions that maybe can address some of each of these three big problems that the global economy faces. But it's a very small step towards it. The final thing that I'll leave you with, though, is that if we look back to 1989 and then think about where we've been over the last 2 years, it's quite striking that for all of the rhetoric about the death of the market and the death of capitalism, there is no hankering anywhere to return to the kind of systems that were discredited so fundamentally back in 1989. So although we know that we're going to have a new system, and we know that we have these major challenges to face, that the global capitalism will continue to evolve, I think it will evolve forward. We're not looking at any kind of return to the things that failed so dismally 20 years ago. Thank you very much for your attention.
Ladies and gentlemen, Mark will take some questions now. We have a few minutes for questions. Can you wait until the microphone reaches you before you ask your question? We'll start down the front here. Thanks.
Thanks, Mark. Comprehensive and erudite as usual. I'm Tim Harcourt from the Australian Trade Commission. In Michael's impressive list of anniversaries, there's one extra, the 20th anniversary of APEC, started by Bob Hawke in Korea in 1989, and ironically now 20 years later, Kevin Rudd forming G20 or G'ing up G20 with Korea again. Do you think something like APEC that was set up after the end of the Cold War and the fear that we would go into currency blocks, do you think there will be a role for Asia-Pacific institutions, or do you think the G20 with the emerging economies with the old is the way to go? And secondly, to what extent do you think the recent collapse in the global economy has been a failure more of national institutions, financial institutions, more than international financial institutions? And just as the comrades said sorry in 89, ideologically, in terms of economic thought, that they got it wrong, do you think some of the more extreme elements on the neoclassical free market side of economic thought will apologise and say they perhaps went too far the other way?
I could spend the same amount of time answering that as I spent giving the original talk. One of the interesting things on globalisation was that it was, especially through the 90s, but also, I think particularly through the 90s, was you had this parallel development of globalisation but regionalisation as well. The most pronounced version of that was in Europe, where even as the Soviet Union was collapsing, you'd had the Maastricht Treaty in 91, the birth of the euro, the single market was completed in 92. And we also had NAFTA in North America. You had ASEAN, APEC, and the Asia Pacific. So it turned out that sort of regionalisation was compatible with globalisation. And I think, excuse me, I told you my voice was going to go. One way to think about that in terms of what I was just saying before is if you have this gap between national institutions and global markets, if you can't go for the global institutions, you can try and get halfway and try to develop regional ones. The Europeans have been by far the most successful at doing that, but to some extent, you could see some of the regional filler as a response to that. In that light, you'd have to say APEC, although it had some significant achievements in its early period, doesn't look particularly well placed to deliver much more going forward. So I think that the answer is more likely to lie in something that comes out of perhaps the G20. I have a paper coming out in the next couple of days looking at this, or some of the other initiatives at the regional level. I think APEC will still have a useful function to perform, but I don't think it's going to be. It's not going to fill that role that maybe something else still could. On the second, it's both. It's a failure of national institutions. It's a failure of the regulatory and supervisory system in the United States. It's arguably a failure of the Fed, although you can have a very big debate about that. And Ian McFarlane and Wascano had a very interesting discussion on that on Monday night here. But I think it's also a failure on the international side as well. It's a failure to manage effectively these big global imbalances. For example, you could make the case that one reason that you have these, at least one contributory factor to these was that countries did a lot of self-insurance. Countries wanted to have very large stocks of foreign exchange reserves so they weren't hostage to going to the IMF and rerunning 97, 98. If you had a credible international lender of last resort or a credible IMF, if you had a credible international institution that filled that role or did reserve pooling, then maybe that component of the imbalance mightn't have been there. So, but if you're going to weigh problems, then you'd have to put most of the weight on national. I think you put most of the weight on national failures in the end rather than international. You would say it's the failure of the regulatory institutions in domestic economies to regulate their financial institutions. Finally, on the apologies thing, Greenspan sort of has, partially. I think a lot of others won't. One of the things that's been fascinating to watch of just over the last few months is how the banks who've survived are successfully moving the debate on already and saying, well, we sort of took our licks and time to move on, and you really don't want to kill us with any more excess regulation, please. Let's move on. I don't know how successful they'll be at that, but it's been quite striking that they're even being able to play the game.
Mark, I'll indulge you in some historical dates. So you noted 1989 and 1991, the collapse of the Soviet Union, as your two dates that you then tied to globalization of trade through value chains and global financial markets. I'm wondering, on both of those scores, wouldn't the 1971 or 72 closing of the gold window and the 1985 Plaza Accords actually give you more explanatory power? Thanks.
Possibly in terms of explaining, my voice, sorry. Possibly in terms of explaining some of the evolution of the global financial system. Certainly you could see the collapse of the fixed exchange rate system. The closing gold standard as being a major landmark in that. And I think in terms of the globalization story, though, I think the failure of the one competing system that we had out there is still, I'd still rate that as higher. That system had started to break down well before 1989. It was already a failure, but that was the point where it became clear to pretty much everybody that this, you just can't run your economy that way. It's not going to work. So I still rank that as higher.
You describe what we've got now as a new system, the G20, and beefing up the IMF. And the Financial Stability Board would come into that, wouldn't it, which is the BIS, Bank of International Settlements. But it doesn't seem that new to me. Didn't Nicolas Sarkozy call for a world financial organisation, pretty much on the lines of the WTO? Do you think we should have gone further along the lines of Nicolas Sarkozy's ideas, or do you think this is going to be good enough? That's one question. And the other is my usual question, what do you think is going to happen to the WTO? Do you think it's going to collapse or come through with a deal?
On the first one, it's not a totally new system. It's a system that has, it's sort of a patched together version of what we had before with the IMF. But there is, I think, the elevation of the G20 to a leaders meeting, which happened really quickly. We had three meetings basically in Pittsburgh announced this is it. We have a new system. That happened much more quickly than it would have happened without the GFC. And that's kind of a radical shift in the way the world, or at least in a recognition about the way the world works. We'll have to see how the G20 actually works post-crisis to see how radical the change is. But it has at least the potential to be quite dramatic. On the WTO, I've been a long-term pessimist on trade. On trade liberalization policy at the multilateral level. At one level, the crisis has actually been, I think, quite a positive story. In the short term, we haven't seen any huge relapse into protection. And I think that's, again, partly because the policy response has been effective enough that we didn't rerun a Great Depression. Partly it's because the existing strictures of the WTO, countries have, by and large, stuck to their obligations. So that's the upside. The big question that I have going forward is that it's hard to see in this environment, much enthusiasm for new liberalization. Briefly, I hoped that this would actually be a spur. I thought before the crisis came along, we were just not going to ever get a Doha round. I thought briefly during the crisis encourages countries to do bold things. If you're ever going to get a Doha round, it's now. My brief spurt of optimism has now faded away. And that means this is going to be an interesting test of that sort of famous old bicycle theory of trade liberalization. This is the theory that if you're not moving forward, the bicycle has to be moving forward to keep things working. If it stops moving forward, you fall over. It's pretty clear to me, the bicycle isn't going to be moving forward for a while. So far, the message is that the bicycle theory doesn't work because we haven't fallen over, that we've held the line. But there's certainly nibbling around the edges, so-called shady protectionism that if you want to worry about it, there are things out there to worry about. So I think the test for the bicycle theory is going to be interesting for the next couple of years.
Well, thanks very much, Mark, for a formidable presentation. I was struck by how often you referred to the issue of imbalances through this period and in the lead up to the GFC. Post-GFC, would you agree that the imbalances have actually become more pronounced in some ways as a result of the impact and the measures taken to respond to the GFC? And if so, what does that mean as we look forward? Does it mean that we are storing up another crisis that's yet to come?
We have different imbalances, I think. If you look at, it's pretty clear, US current account deficit has shrunk quite dramatically. So some of the imbalances have closed, but we have now big imbalances in terms of fiscal. We've shunted to very large fiscal imbalances. We have big issues over what public debt trajectories are going to look like going forward. So as I sort of trailed, I think we've got new challenges that will come out. It's also going to be interesting to see whether the same pattern of imbalances is reestablished or not, or whether we get something quite different. One of the interesting questions, and Warwick is doing some really interesting work on this, is what happens to the allocation of global capital post this crisis. So we had the big feature of imbalances was that you had capital flowing in the wrong direction, capital flowing uphill from poor developing countries into rich developed ones. If, as I think is still most people expect, you have this prolonged period of subpar growth in the developed world, low interest rates, weak financial systems, do you get a reversal of that pattern of capital flows? In which case we'll have a whole new set of challenges going forward because then we go back to the challenges that the 1990s were about, which was developing countries find it really, really difficult to manage large inflows of capital. So we've sort of we sort of ran that problem through the 90s and into 2001. We went through a different problem of global capital through 2002 to 2007. It's possible we might go back to a new interesting, an old new problem of global capital, managing global capital flows post the crisis. I don't know, Warwick, if you want to say anything. No.
Okay, unless there are any other questions, I might, in the interest of Mark's voice, bring this to a close. I mean, I don't know about you, but I would quite like to see Mark mime an answer, or maybe charades, but we might spare him that. So could you all join me in thanking Mark for an absolutely fascinating presentation?